All right, good evening, everyone. This is Ajit Mishra from Religare Research, and we are back with yet another session of Week Ahead with Religare Technicals. So, mostly people know, those who are joining us for the first time, I'll just share the construct. So, basically, we talk about the market performance this week, and followed by our view on key indices, both Nifty and the banking index, and some of these stocks, both on the positive and negative side, which one can keep a close eye on for the next week. So before we talk about our observations, so just to share a quick disclaimer and disclosure that the observation that we're going to share during the presentation are based on the insight that we have based on the charts and the other parameters, and it's not to be considered as a trading or investment opportunity. And please take help from your investment advisor before making any trade or investment based on those related ideas. Now coming to the markets, after 4 successive weeks of rise, finally we saw a bit of consolidation in the market last week. So initially, for most part of the week, the tone was positive, but it was very gradual, very grinding, and the decline in the last trading session, managed make sure that the index end almost on the flat note. So barring the benchmark, we on majority of the sectors were under pressure. So you can see that from the losing part, media, auto, FMCG, energy, and pharma. Wherein media lost maximum due to sharp decline in Sun TV and Z, and then we had profit taking in the other sectors. On the gaining side, banking managed to outshine the index, that is there, but there was not decisive move, and IT also managed to hold the gains. But the rest of the indices remain flat to slightly on the negative side. When it comes to the top performer from the Nifty 50 basket, Power Grid, Kotak, Hero Motoco, Hindalco, and ICICI Bank. So two of these banking stock, and then we had stock from auto and other sectors as well. Underperformance, Bajaj Twins, both lost nearly 4% each. Then profit taking in ITC and M&M, means two auto majors also like M&M and iShares. Because of that reason, we are seeing that the auto index were among the top losers within sectoral pack. So it's more of like a profit-taking phase in the banking, non-banking financial companies and these auto names, and that's the reason that we have these 5 stocks on the top losing side. Now, what do we anticipate next? So this is how the Nifty closed this week. A very small undecisive candle. So that last time what we discussed is that it's important for Nifty to hold 18,350 levels decisively to progress towards the record high. But again, we are seeing that it's taking breather around that area, in line with what we are seeing in the entire rebound from this recent bottoms. So it's good, it's healthy, as long as we are not seeing any major dip, because intraday, if you have noticed today also, that after the negative trend for most part of the day, the rebound in the last 1.5 hour trimmed the gains, trimmed the losses. So it's a kind of like when it comes to the index, we are still managing to hold the gains. We are still managing to hold the critical levels. But yes, at the same time, we are not seeing decisiveness in the trend. Why? Because the participation is restricted to select index majors and few handful of mid-cap counters, while majority are under either trading range bound or witnessing pressure. So it's a very limited choice that we have right now, especially when it comes to the sector and stock selection. But as long as the trend is up, one should not go with a contrarian approach, assuming and anticipating that there could be a reversal in the market. So yes, there's sign of exhaustion, there's sign of a bit of consolidation, but we feel as long as we are holding 18,100 mark, this momentum or this positive bias is here to stay. Below 18,100, 17,800, 17,900 zone would act as a support for the next week. Upside, we should regain strength. So intraday, if we talk about for a day or two, 18,450, yes, that's the immediate hurdle, but decisive hurdle would be close to around 18,700 as per our projection technique. So it's not the record high, but the new level that we are eyeing close to around 18,700 and then 19,000 mark. So in index, though the bias is positive, but indications are in the favor that we might consolidate further, wherein the downside seems capped. 18,100, 17,800 would continue to act as a support. And for any fresh momentum or to regain strength, we need a close above 18,450. Meanwhile, as we were saying that the choices are restricted now, unlike what we were seeing earlier. And another important aspect is that we are now seeing breakout failures also. It's like that earlier we were seeing that stocks which are doing well, they were managing to maintain the positive stance, but now we are seeing breakout failures also. So that is something also which one should keep in mind while initiating a short-term trade. Now coming to the banking index, so outperformance remain because wherein while the Nifty ended almost on the flat note, wherein the banking index made a new record high, gained nearly over 0.5%. But again, in line with the Nifty, here also we are seeing lack of decisiveness, means we are not seeing very strong buying across the board. So except PSU banks, wherein we are seeing traction, the private banking majors, like we have discussed this earlier in the last webinar, that ICICI Axis after this recent profit taking should participate now, but the major focus area would be the second leg of counters like HDFC Twins and Kotak Bank, which were not participating it yet. So yes, there was participation from Kotak Bank and HDFC Twins as well, but again, it's not decisive enough to help the index to close with a decisive candle. Decisive means at least it should have at least 2-3% kind of a move, which we could see in the index. So that is not the case so far. So comparatively, it still looks better to us, especially if we compare it with the Nifty. But when it comes to stock specific approach, again, one needs to be selective here also, because PSU banks, they are holding strong, they are seeing momentum, but usually the reversal also remains in a similar manner. So one should be very strict with the stop losses, especially with the PSU basket. And from the private banking space, ICICI, Axis, Kotak, these are three names which look better to us, because we feel that in case if there be any profit taking in the market also, the downside will be restricted in these names. So talking about the support, when it comes to the index, 14,500 to 14,800. So it's similar to what we have discussed last week. And the resistance also remains the same, that 42,900 to 44,200. In between, in line with index, in case if we consolidate, you should focus more on accumulating the private banking names that we have just shared the name. Now coming to the stock specific ideas. So the first name that is on our list is Britannia. So a steady mover from the FMCG basket, and you can see this decisive candle, and this candle was result in a breakout from this consolidation range, which the stock was trading in for last couple of months. And still we are seeing, despite the uncertainty in the market, it's holding gains, it's hovering in a very narrow band. So indications are in the favor that it might consolidate for few more sessions, but eventually it should resume the trend and inch higher. So this stock anywhere in the range of 4050 to 4000 zone is a good buy, is what charts are indicating, and upside close to around 4300, 4400 could be the area basically it might head to. So this is one stock, and plus, since we are seeing uncertainty in the market, defensives are comparatively better, especially when it comes to the long trades. Another stock which is there on our radar is a very decisive move that we have seen. We are talking about PSC here. So you can see this entire range. The stock has been trading in close to around 125 on the higher side and 100 on the lower band. So finally, after almost like 5-6 months of consolidation, it has breached that consolidation range with decent uptick in volumes. So all indications are in the favor that the stock should inch gradually upwards toward the level of new record high. This is the indication that we have, and despite the kind of mixed trend that we were seeing in the market, it managed to hold the gains and ended on a strong note. So that clearly shows the potential in the stock. So these are the two names on the positive side that we like. Now, what if the markets allow you to go short? Means if the profit taking increases further and may inch lower. So one stock which look weak to us, first name comes Bajaj Auto. So the stock was not doing much. So if you see that after retesting the record highs, the stock was witnessing profit taking, and in this rebound, it was not a very decisive rebound because it was trading in a channel or a small flag, you can say, which is indicates a pause after a particular directional move. And now we have finally seen a breakdown from the same as well. At the same time, it has slipped below the long-term averages also on the daily chart. So all indications are pointing towards this negativity to extend further. And we expect Bajaj Auto to underperform majority of the auto counters in the near future at least. And lastly on the list, Jubilant Foods. So Jubilant Foods, the stock after a very sharp decline from the record highs, took support around the trend line, which is prevalent from last several years. But last week, in fact, it closed around that level, and finally we have breached that level, this trend line. So now majority of the indicators are pointing towards this negativity to extend further in the coming week, and it might inch toward this red line, that is the long-term average on the weekly chart, which close to around 500 levels. So this stock looks sideways to weak to us. So any rebound or consolidation, further consolidation can be considered as a shorting opportunity in this stock. So just to sum it up, talking about the major indices, key indices, for Nifty, indications are in the favor that we might see some consolidation, but the downside seems capped close to around 18,100 to 17,800 is the area basically where we have multiple supports. So that level index should hold. But meanwhile, challenging part is that earlier we were seeing participation which was not restricted now we are seeing with several breakout failures. So with a very restricted list of counters which are holding strong, one needs to be very focused about stock selection and sector selection at the current levels. Largely, yes, we are focusing on positive names so far, but I don't see any reason that in case if market slips below 18,200 levels, then you should add few shorting positions also to your trading bets to hedge those positions, especially in case if you're carrying those positions for the overnight trade and they are leverage position. Banking comparatively stronger, but at the same time, private banking name, they are slightly on the back foot right now, but we feel that in a market like this wherein we are expecting profit taking, it's prudent to stick with the private banking names, because though the PSU are doing well and witnessing the momentum also, but in case if there be any profit taking, it could be steeper in the PSU banking counter in comparison to the private banking names. On the stock specific front, we talked about Britannia, we talked about PFC on the positive side, and Bajaj Auto and the Jubilant Food, which look weak to us. So yeah, with this, we end the presentation, and now we'll do a quick poll. So please share your response quickly, and then we'll start with the Q&A session. And once you are done with the feedback, you can start posting your question using that Q&A tab. You have that Q&A tab on your screen. You can use that to post your questions, and no individual stock specific queries, please. Please quickly fill this feedback poll so that we can start with the Q&A. Okay, let's get started with the Q&A session now. Okay, so let's see. What is the first question? So first question is from Mr. AR. The question is that, can you please tell me why any stock goes down in spite of going up? Because mutual fund, insurance company, FI, DI is continuously buying it. So see, the buy part is not the focus area in this webinar. We are focusing largely on what means what is going on in the market, what is the real price action that we are seeing is something that we are focusing in this webinar. That why part comes under fundamental, wherein like we have multiple things to talk about, but again it would dilute the entire purpose of having this quick webinar so that we can share our insight on the actionables. So in case if you are associated with us, you can send your email to the respective branches or your business partner, and you can directly write to us also in equityresearch.religare.com, and the fundamental team would revert. Okay, the next question is from Mr. Balaji, that please share your view on power sector. So power sector, Balaji, as you know, we've just shared the name PFC. It's not directly related to the power, but stocks like Tata Power, NTPC, Coal India, like energy basket, if I may say, majority are either seeing consolidation or profit taking. So I feel that at least in the short term, the bias looks sideways to negative, especially in these names. But yes, REC, PFC, these stocks are exception in this particular pack, as they fall into a different category altogether. So from the short-term trading perspective, I feel that these are the better candidates to look at instead of going ahead with the power names. PSU Bank, Rakesh Kumar Sharma has asked for the view. So Rakesh, that is what we were sharing, that PSU banks are basically witnessing strong traction. We have seen almost all the stock. Earlier it was like, we were seeing restricted move wherein SBI, Canara Bank, Bank of Baroda, they were participating in the move, while rest were like, reeling under pressure. But now you name any bank from the PSU basket and they are up around 30-40% minimum from their 52 weeks low. But again, that is something which is very critical and very important to understand here, is that stocks which are fundamentally sound, wherein there's some changes fundamentally, during the results that we have noticed, and because of that, in case if the stock is participating, then it's good, then you can participate. But otherwise, just because the entire sector is participating and we were seeing just a rebound recovery, so that shouldn't be the criteria to look into any trading opportunity or investment opportunity. So for majority of the PSU bank, we feel that it's too early to say that the problems are over and everything is that great. So I feel that it's prudent to stick with the top three names, like we have discussed several times during the webinars, earlier webinars: SBI, Can Bank, and Bank of Baroda. They are comparatively better, reliable names, and wherein we are seeing, yes, the reaction is equally severe, especially when we see the profit taking. But SBI is comparatively stable within this entire pack. So I feel that one should not go overboard in this recent rally in the PSU bank, and especially in case if you are chasing momentum, which we strongly don't recommend, especially in the market like this, wherein we are seeing frequent breakout failures also. Maintain very strict stop losses. Hard stops means you should put your stop losses in the system. You can't expect market to reward you just because they are inching higher. So in case if there will be any profit taking, it could be equally sharp. So you might end up holding these names at a wrong prices. So this is something which is very important, especially from the PSU banking space front. Yeah, next question is from Mr. Praveen Kumar on FMCG and IT sector. So Praveen, IT, I feel is showing resilience, but I was wrong on one part. Last week, in case I guess we have discussed about the mid cap IT names doing well. See, majority of the mid cap IT names, they are witnessing equally sharp reversal or decline after that recent move, wherein the private banking large IT names like TCS, Infosys, they are managing to hold well. So I feel it's too early to say that we are going to see the outperformance in the mid cap IT space, considering the kind of sharp decline that we have seen from the recent top. So I feel for a time being, it's prudent to stick with the top IT names, barring Wipro, and from the FMCG pack also, again, one needs to be selective, because if you notice that ITC, we are started seeing profit taking after a very strong surge. So it's not a kind of level to trade in or means to invest in. Let the stock stabilize first. Similarly, HUL is witnessing pressure and we are not seeing any respite. So Britannia, that we've shared during the presentation itself, which looks strong to us. So it's kind of a like mixed bag in both sectors, like FMCG and IT. So from the stock specific point of view, we have shared few names, and from the IT pack, we feel it's prudent to stick with the IT majors instead of mid cap IT names. So no individual stock specific queries, please. Okay, so Mr. Raman, thank you for your feedback, and we'll surely try to, go live with our commodity-related webinar also soon. Thank you. See, in case if you have any query related to the Dynami app, so please get in touch with your respective team, and they'll help you out with this. In case if you are facing any issue, you can write an email to VK team also, and they'll help you out in this. Okay, so Mr. Nilesh Koki has asked our view, long-term view on the index. So long-term, I'm seeing that, after spending almost a year under consolidation, because we started correction in the month of October last year, after making a high at 18,604, and we are in November now. So after spending nearly a year of consolidation, we are trading at the record highs. Global markets are recovering and sustaining. That's the important part, and especially I talk about the US markets and the kind of gains that we have seen in the US market. One of the important aspect that I would like to highlight here is that in line with what we are seeing in our markets, wherein the index have reached almost to the record highs, broader markets are not participating. We are seeing a similar kind of trend on global front also. So what it indicates is that participants are more concerned about their money at present level, and they are choosing safety in comparison to the return, by investing in the index majors and quality companies instead of small cap and second rank mid cap counters. So it's a global phenomena that we are seeing right now, and considering that the global outlook is going to change gradually, and we are already at the record highs, we believe that this momentum or this overall trend is likely to remain on the positive side with a bit of intermediate consolidation and correction phase. So positionally, if you talk about 19,000 plus zone, it's not a big deal in 2023. But yes, in between, as we were saying that how this diversion between the broader markets and the benchmark is going to subside, and how we're going to see this divergence closing is something is going to be critical from the trader and investment perspective. So next question is from Mr. Rajesh Mishra on metal sectors. So metal sectors, Mr. Rajesh, is basically we are seeing mixed trend like we've discussed about the other sectors. So here in like almost all the stocks were participating in the recent run, but with a marginal profit taking in the market. Stock like SAIL, Tata Steel, they have diluted their entire gains completely in this last 2-3 days. So at the same time, BDL, JSW Steel, Jindal Steel, they are holding strong. So again, in a market like this, wherein we have very select few names to look at, rather maintaining a sector-specific approach within the sector, also you should look for like what all stocks which you are willing to bet on. So I feel that the stocks wherein we are seeing decisiveness and resilience during the market correction is something that you should look at. Amandeep Singh have asked on the NBFC sector. So Amandeep, if you see that the space is majority of the counters are like witnessing consolidation. So Bajaj Finance, the biggest name in this space, have also started witnessing pressure. The stock was hovering in a range close to around 7,700 to 7,000 was a band. It has recently breached that lower band, and now it's inching towards the long-term averages. It's almost like tested the same in today's trade. So there's a possibility that this sector might remain sluggish, because if you talk about the other names, be Chola Finance, which is comparatively better, then we have Shriram Transport, Housing, and LIC Housing Finance. All these names are either witnessing profit taking or decline or witnessing consolidation. So for a time being, it's prudent to stick with the private banking majors instead of like looking for the bets in the NBFC sector. So next question is on the best infrastructure shares. So again, I will not name the shares, but stocks which are holding strong within this particular space is LT. It's trading at the record high. Then we have Siemens. Then we have ABB, Cummins India. All these stocks are doing well. Already we have discussed about IT sector view. Okay, so media sector, Ravi, of late post numbers, Sun TV have witnessed a very sharp decline, and there's hardly any respite. And now we are seeing that Zio also joining their rank. So for a time being, at least, it's prudent to avoid media sector in case if somebody is stuck. So utilize any rebound to exit in Sun TV is what indications are that we have in the charts, and similar trend looks for the Z Limited also. So it's prudent to avoid media for a time being. Next question is from Mr. Rajesh Mahajan on fertilizer sector. So fertilizer sector, Mr. Mahajan, we are not seeing any traction. In fact, the top name from the space, Chambal, is witnessing profit taking. But yes, we have some of the names in the agri-chemical space which are doing well, like PI, which is holding strong. But again, one needs to be very selective in this space. And from the short-term trading perspective, I feel that it's prudent to avoid these sectors because we are actually not seeing anything very positive going on, at least from the short-term point of view. We have already discussed about NBFC. Last, okay, we have on pharma. So pharma sector, Mr. Pankaj have asked. So pharma is a sector, Mr. Pankaj, yes, we have seen a recovery and a rebound, and I was anticipating that rebound to extend further. But within this, during this earning phase, we saw that, a very sharp decline in some of the prominent names have reversed the trend. And again, we are seeing that it's trading sluggish. So idea is in line with what we are discussing about the other sector. Instead of maintaining sector specific view, maintain stock specific view. And within this pharma space, Granules, Cipla, Sun Pharma, they are comparatively better candidates. They are strong candidates. Then we have some of the counters which are witnessing rebound, stock like Landmark, Biocon also. But the top names is something that we recommend one can consider, especially in the market like this. Yes, the next question is on cement sector by Mr. Lakshman J. So, cement, yes, they are holding strong. If we talk about top 3-4 names, Ambuja and ACC, they are anyways doing well, post the acquisition, and Ultratech, Dalmia, they are holding strong. JK Cement also falls in the same category. Cement, by and large, they are still holding strong, but as we've discussed about this recent phenomena wherein we are seeing breakout failures. So that's the reason that one should be cautious in the cement basket also, because after a very strong swing, we are seeing a very narrow range consolidation in most of these counters. So whether this consolidation is going to end up with a breakout and it's going to sustain is something that the time is going to tell us. So maintain very strict stop losses in case if you are trading cement for a short-term time point of view. But yeah, structurally they are looking positive to us. So again, Mr. Rajesh Mahajan have asked about which sectors to look at for investment in the coming days. So no sectors, but maintain stock-specific view. Sectors we have talked about, barring one or two like media. Almost all the sectors we have seen some of the other counters doing well. So it's more of like stock specific approaches is something that one should maintain instead of looking at any particular sector. Banking, yes, as a sector is doing well, wherein we are seeing participation from across the sector, across the board. But the rest of the sector we are seeing mixed trend. All right, so I guess with this we have answered all the queries which were related to sectors. And please excuse us for the stock specific queries. Yeah. So yeah, thank you everyone for joining in, and next time, same time, same day, we are going to connect, but with a monthly rollover report, which talks about how the derivative positioning we have for the next month. So my colleague is going to take that session. So we connect you on next Friday at 4 p.m. for that. So thank you everyone for joining in, and with this we can end this session.